Yeah. So we're going to do some technical analysis. There's basically just understanding um how the market move and understanding, you know, because why the market moves certain ways. Because sometimes you look at this chart and you just see a bunch of wildness, and you might think to yourself, "Ain't no way this this chart have any patterns. Ain't no way this chart have something that's gonna tell me which direction it's gonna go." Because when people look at charts like this, the first thing they would think, there's no way to tell the direction the market going, and this is just gambling. But really and truly, it have a certain it have certain rules this market has to follow, based on historical data. It have rules that the market follows. And once we understand the rules of the market, we understand the rules of the game, and we could play and we could win, right? Because really and truly, it's almost like a game, right? So now we hop on the 4 hour time frame, right? Um, yeah. So first of all, this is
Headphone,
who's that man not talking? Yo, mute all your mic. Sean, mute your mic.
Alright, bro.
Yeah. So first things first, right? You gotta understand this. The market literally could only move in 3 directions, right? Very simple. It could either go up, it could go down, or it could go sideways, right? Where's it going? It could go up, it could go down, or it could go sideways, right? If it's going down, we know how to profit while it's going down. If it's going up, we know how to profit while it's going up. If it's going sideways, then you go learn how to profit while it's going sideways, right? Now, the market, it moves in trends, right? Trends. A trend is simply the motion in which the market moves in a particular direction, right? All you mute all your mic because I'm hearing crickets. So the first trend would be an uptrend, right? Now, first of all, the market never moves straight up. It never moves straight up. It moves up in a zigzag motion. So it is push, pull back, push, pull back, push, pull back, push, right? Now this is basically an uptrend right here. This is the characteristics of an uptrend, right? Now the second direction the market does move is sideways, right? Which is also known as consolidation. So that's when it's just going in a zigzag motion and it's not really going nowhere. It's just going up and down in one spot, right? And then the third direction, obviously, would be a downtrend, right? That's when you're going down, pull back a little, go down, pull back a little, go down, right? Now, even though I draw it nice and pretty, like right here, it doesn't normally be nice and pretty, right? Hold on, let me send that link from Jordan. All right. Now, these three is like phases, because whenever any market you trade in, you had to know what phase it's in. It could either be in an uptrend, it could either be in consolidation or sideways movement. We would just call it consolidation because it's the right way to call it. it could either be in a downtrend, right? Now, before you place any trades, you want to know what phase the market is in. If the market is in an uptrend, then it's better you just look for buys. Even though you might see sell opportunities, they won't last long because this is a game of probability. So you want to have the odds on your side, right? Everybody can hear me? Just type in the chat, right? So it might seem simple right now, but it's not as simple as it looks to be able to identify the trends, right? So I'll just show you the characteristics of an uptrend, right? Now, pay attention to this part. For the uptrend is made up of several parts, right? You have the impulse, which is the first push, right? And then you have the pullback, which is the pullback in that form, right? The impulse is usually strong, and then the pullback is like a slow, draggy movement. And then when it's ready to push again, it push strong, and then the pullback is a slow, draggy movement, right? So, like for example, let me see if I can find an example in the chats. You see how this market push hard, it pull back slow. Push hard, pull back slow. If you get what I'm saying, right? Now, in order for the trend to be valid, we have what we call highs and lows. Basically, for the trend to be making for the uptrend to be valid, the trend had to make something called higher highs and higher lows. Simply means when the market make a high, we call this peak the high. When the market make a high, right, and it pull back and it make a low. And what I mean by a low, it simply means that the pullback cannot pass the level, this level if it starts right here, basically. So let me just do another one so it's clear here, right? First, the market will make a high at the beginning of an uptrend, right? But you don't know it's an uptrend yet. In order for you to know it's an uptrend and in order for it to be valid, it had to make a low first, and then it has to make a higher high, right? Because that's how the market does move. It does move with high, low, higher high, then a higher low, and then a higher high, right? Now, the reason why it's called that is because the first move is a high. The second move, right, is a low, right? Now, you don't know if this is an uptrend yet because sometimes the market, instead of the market stopping here, it could just go straight down. You don't know it's an uptrend yet, so you can't categorize it as an uptrend yet, right? The only time you could say it's an uptrend is after it make a high, it make a low, and then it make a higher high, right? And for this to be a higher high, it had to surpass the previous high, right? So the market must, after it makes the low, it had to surpass the previous high. And this is not a low until it pass this high. Meaning, yeah, you can see a little peak in the bottom here, but sometimes before it can reach up here, it just drag back down, right? So you don't label it a low until it surpasses the high. Now that it surpassed the high, then you know this is a low. right? Because it had to pass the high first, right? Now for the second one, this could be the higher high. The reason why is the high, why it's called the higher high is because it's higher than the previous high, right? So we call this the higher high, right? And then this one here would be, type it in the chat if you know what it could be.
Move the text box. Let me see.
Lower.
Nope.
Move the box, we can't see.
Yeah.
All right. So let me see. Is it gonna be a high or low?
All right, and Daryl had typed it, right? So it will be the higher low, and the reason why is the higher low is because this low is higher than this low, right?
That's the
No,
one thing I get right this entire time.
no, you don't know this is a higher low yet, right? If the market pull back here, you don't know this is a higher low yet. In order for this to be a higher low, the market must pass the higher high, right? If you get what I said. So because sometimes the market could pull right back and it go where it wants. The only time you label this a high or low is when it surpasses the high, right? And then now that it break above the high, then you know, okay, this is now the higher low, right? And then that's basically what uptrend is. Uptrend is higher highs and higher lows. When the market making higher highs and the market making higher lows, then we know it's in an uptrend, right? Right. So I'm gonna just screenshot this so they can have that safe, right? So next one, when the market in consolidation, right? Now this is how we know when the market is in consolidation. When the market is not making any higher highs or not making any higher lows, and it's just moving sideways, no highs, no lows, sideways, that is consolidation, right? Usually, you would like to stay away from this kind of market because you could only make money from the top to the bottom. Yeah, you can place trades from here, go down, or from here, come up. But you want to be able to enter a trade, and you want the trade to be worth it, right? So when you enter a trade, you want to know, okay, this trade could ride for a long time. You know, it could ride and keep going until the trend changes, right? So I'll just label this. Well, you got to be able to identify what phase the market is in before you can place a trade, right? Now, for the downtrend, is exactly the opposite. We will get into that, right? For the downtrend is exactly the opposite of the uptrend, right? The market would make a low first, right? So make a low. I'll just label this L. Then it would make a high, right? And then what it go make next? So if it's a downtrend. Let's type it in the chat.
Lower,
Exactly. You'll make a lower low, right? And then what would it make next? What would this point be?
Higher low.
high low, a lower high. No, low,
Yes, a
lower,
lower high,
lower high.
right? And that's the characteristics of a downtrend, right? Now, when you're trading, how you get sniper trades is being able to tell when, because this is where you want to enter on. You don't just want to enter the market when it's already moving or it's down here. You just want to enter right as it turning on the lows, on the low or the higher low. If you're going long, on the higher low, or if you're going short, you want to enter on
High.
the lower high, no, on the lower low. You know.
I don't see that nigga, bro.
Right. So, and again, when the market make the low, you don't know this is a low yet. All you know this is a valley, basically. And then it make a high. You don't know this is a high yet, but you can see that okay, it turning, and it make a peak. So it's not valid. It's not a valid downtrend
Bro, you sell my shit.
until it make a lower low. You had to allow it to move to observe what the price doing before you can determine what phase the market in, right? Because sometimes the market, instead of the market making a lower low, it could stop right here and then come back up, and then it's in consolidation now, right? So that's why you just observe until the market make the move now. Sometimes it can take long, sometimes it's short. So when the market make the first lower low, now you tell yourself, okay, we are downtrend now, right? And then the market pull back, you make um you make this peak, and then when it pull back down, you know that this is the lower high, right? Now, a simple way people could take trades is a simple way you could take a trade, right? Once you know the market is in a downtrend, then you know that the market not supposed to pass this point, right? Because the characteristics of a downtrend is a low, a high, a lower low, and a lower high, right? So you're not expecting the market to pass this high. You're not expecting the market to make a higher high because it's in a downtrend, right? So let's say even if the market reach all the way up here, right? You know that is a downtrend, and in a downtrend, the characteristics of a downtrend is lower lows and lower highs, right? So given you have a couple reasons to take this trade, you can enter a trade right here. Your stop loss going above the high because you know the market now is not supposed to reach up there, right? You take profit going to the next lower low because you know it is a downtrend, so you expecting the market to drop down and pass this lower low to make another lower low. That's just a simple way how knowing what phase the market in could help you place a trade, right? Now, obviously, you need several reasons why. This is just like one reason. You know, when I place in a trade, I would have at least 5 reasons why I am entering a trade on this very spot. It's like you're waiting for the stars to align in a form, right? So that's the characteristics of a down trend, right? Lower, and lower high, right? Something simple like this is very important. Any questions? All right, I'll just screenshot this.
Yeah, I actually got a question. Because that's the only one thing that I find still confusing when I'm trying
Judge's
to
tweet.
learn the trade, is that how do you know
She-
exactly where you place your stop loss and your take profit? So let's have an example. Let's say I start in the trade at
Ready?
say $100.
Shanta.
How do I know how high to put my stock loss and how low to put my take profit?
Repeat that question.
All right, let me repeat it. The only thing that
Mhm,
I'm having trouble understanding about the trading
mhm,
is setting the stock loss and your take profit. So let's
mhm.
have an example. Because once I understand that, then I'm gonna be in line with
Okay,
everybody else.
I just give a simple example of this one
Yeah,
strategy.
yeah.
Simple example, you know that the market cannot make a higher high, right?
Hmm.
Because it's in a downtrend. So you place a trade right here. So you know that if the market make a higher high, then it's not a downtrend, right? So you can put your stop loss above the previous high. And because you know that it's a downtrend,
Yeah.
you can set your target for the next low because you know the characteristics of a junction. The market cannot make a higher high, so the market must not go beyond this point. And when you enter the trade here, you stop loss there right here, just in case the market do something crazy and
Okay.
go beyond that point. Because if it go beyond that point, it's no longer a downtrend, right? You enter in on the idea that it's still a downtrend, right? And then for
Yeah.
you take profit, you know that the characteristics of a downtrend, the market must make a lower low, right?
Hmm.
So this would be a good target because you know it had to pass this low. And if
I got it.
and to pass this low, it had to hit your take profit. If you get what I'm saying.
Yeah, I got you. I got you.
So that help,
Yeah, it did. Definitely, definitely.
because you don't just like find trees and you put your stop loss and you take profit anyway, right? You put your
Hmm.
stop loss in an area where if you're wrong, your stop loss would only get hit if you're wrong. If
Okay.
your analysis is wrong. If the market is not in a downtrend, that's the only how your stop loss will get hit. But if it's in a downtrend, then your stop loss is in a safe area, right?
Hmm.
And for your take profit, you can take your profit whenever you feel like, right? But if you go on the idea that the market is in a downtrend and the market has to make a lower low, then you would probably want to take advantage of the whole move and you would set your target for the next low. You can set
So,
your target lower, you can set your target higher, but a safe bet would be the next low because you know the market has to make a lower low, right?
yeah, yeah.
So
Okay.
how do you know when the trend is changing?
All right. So, and I know you know the answer to that question, but let me get into it, right? Now, as I was saying,
Hold on, I have a question, eh?
mhm,
Um, when you're doing the analysis to figure out whether there's a downtrend or uptrend, with which time frame you find is best?
every time frame might have a different trend, right?
Hmm.
So, if you're looking at a daily time frame, the daily time frame might be going down. Okay, for example, right? Let's say we're on a daily time frame, and a daily time frame making this impulse, right? Now, this might just look like a few candles coming up and then a pullback, right? But because you're on a daily time frame, one candle is a day or time movement, right? But if you drop down to the 1 hour time frame, one daily candle would be 24 1 hour candles, right? So while you're seeing an uptrend on the daily, when you zoom in, when the market pulling back, right? And you zoom in because you cannot zoom in when you go in the 1 hour. You might see a downtrend on the 1 hour, right? What might be a simple pullback on the daily would be a downtrend on the lower time frames, if you get what I'm saying, right? So for example,
Yeah.
let me see if I can find an example inside it, right? So look at this, right? Downtrend. market drop, pull back, drop, pull back, drop, right? Everybody can see that, right?
Yep.
Yeah.
Yep.
I'm gonna highlight this too. Low, I'm taking it from the wick. I'm taking it from the lowest point in the market reach, right? Low, higher low, lower low, higher low, right? And we're on a weekly chart. So every candlestick is 1 week movement. So let me just highlight this area right here. This is a pullback, as you can see. Now clearly, this is a downtrend, right? On the weekly time frame, this is a downtrend. Even this was a higher, this was a lower high, right? And it's still coming down, right? So clearly this is a downtrend on the weekly time frame. Now, if we hop up, make sure it's visible on 1 hour. Okay. So if we hop on down to the 4 hour, for example, right? And we go to that area where we highlighted. Okay, somewhere. Saturday. Okay. Yeah, so everything on. Something else.
Oh! Yes, bro. Yes, bro.
Alright, I'll just have to do it. Yeah, I was saying, right? So, a low, high, um, a low, pull back, right? If you hop on the daily, back to the weekly, we highlight this pullback right here, right? Because we want to see how it look on the lower time frame. We hop on the daily, right? No, this is a pullback on the weekly time frame. On the daily time frame, maybe it don't look so much like as a trend, but if we go on the 4 hour or the 1 hour, I'm back here. Like, we hop on the 4 hour, we can clearly see that is a trend, and the trend will be more visible on the 1 hour, right? You can clearly see this pullback is a trend, right? Now seeing the higher highs and the higher lows.
Yep.
Yeah. All right. So yeah, each time frame do have a different, might have a different trend because a pullback on one on a higher time frame could be a trend in the opposite direction on the lower time frame, right?
Yeah.
All right. So, any more questions before I hop into how when the trend is no longer valid? All right. So I just showed y'all how to validate a trend, right? How to the characteristics that make a trend, basically, right? Now, you had to be able to tell when this uptrend is no longer an uptrend, right? Now the trends does change, obviously, because it would go from an uptrend to sideways to a downtrend, or it could go from an uptrend to a downtrend, or it could go from an uptrend to sideways to an uptrend, right? Now, you just learn the rules of an uptrend, right? Higher highs and higher lows, right? Now, from the minute you see the market is no longer following the rules of an uptrend, then you know that, okay, time to pay attention. This is a cause for concern, basically. When the market make the high, make the low, make the high, make the low, make the high, and make the low, and then if you see the market do something like this, and then it come down like this, right? Now, from observation, you could clearly see that the market did not make a higher high, right? It did not make a higher high. Now we know this because obviously the market did not come above this high. I'll just draw a line here, right? Obviously the market did not come above that high, right? Now from when the market from here, when the market make this move to up here, right? We're still going to assume it's an uptrend. The only time we know it's no longer an uptrend is when the market makes a lower low or a lower high. Because the characteristics of an uptrend is higher highs and higher lows, right?
Yeah.
Higher highs and higher lows, right? Now, it might get kind of confusing with the highs and the lows or whatever. But all you gotta know is an uptrend is higher highs and higher lows. So the minute time the market make a lower low, right? That simply means the market go lower than the previous low, right? Then we could look at this. Whenever the market make a lower low, then this last high becomes a lower high, right? Because the market obviously didn't pass this high, it didn't make a higher high, and it make a lower low. So obviously this is now a lower high, right? Now lower highs. Oh, wonderful. Right. So lower highs is not part of the characteristics of an uptrend, right? Lower lows is not a part of the characteristics of an uptrend, right? So obviously this is no longer an uptrend. And once this is no longer an uptrend, it means that we're no longer looking to buy this. We're no longer looking to enter longs, right? Now we had to identify what phase the market is in now, because obviously it's no longer in an uptrend, right? Now, just by observing this, the market make a high, right? The market make a low, right? The market make a lower high, and the market make a lower, right? Now, what kind of trend? What kind of trend is this now? Somebody tell me. What's the characteristics? What type of trend makes lower lows, lower highs, and lower lows? Obviously, yeah, a downtrend, right? Now, once the faster you could identify a downtrend, the faster you can take advantage of it, right? So you know
So
now. Go ahead.
when you start to notice that it's changing, it's best to push up your stop loss, or you could leave if you're satisfied with your profits.
I mean, you probably should just close it if you know the market is no longer in an uptrend.
Okay.
Because if it's in a downtrend, it's probably going down. No, right?
Yeah.
So now that it's in a downtrend, you're no longer allowed to look for longs because longs are for trends that's going up. You would look for shorts now, right? So you know, okay, this is a downtrend and making lower lows and lower highs. So obviously, because this is a lower high and this is a lower low, when the market pull back, you're not expecting the market to go above this low because you know the market is in a downtrend phase. The market's giving us some characteristics of a downtrend, right? So this is
Yeah.
what we would expect the market to do what a downtrend does. It would make lower lows and lower highs, right? Yes, thanks. Make lower lows and lower highs, right? Now that is a simple um, explanation as to know when the trend has changed, right? Now trends they have to change be- because of the way the market works, right? Now a possible reason why a trend could change is on the let's assume this happened on a lower time frame, right? Let's assume this happened on a lower time frame. On the higher time frame, this would just be one move up, right? And we know that the market doesn't go straight up. The market must pull back, right? So when the market pull back, it might just look like a pullback on the higher time frame, but on the lower time frame, because it's trending up and it's about to pull back, the trend on the lower time frame has to change to pull back, basically. Because on the lower time frame, it might look something like this, right? Higher highs, higher lows, higher highs, higher lows, and no market goes straight up. So the market had to pull back, right? Had to pull back, and it could form a trend on the lower time frame. And then when it finished make the higher low on the lower time frame, it could change again, right? And it could start trending up on the lower time frame, right? If all they understand, everybody understand what I just explained? All right, so that's why like when you trade them, you stick to a particular time frame. You know, if you was only trading the higher time frame, let's say this was a daily time frame, the big move, and the daily time frame is in an uptrend, you would only look for longs. You're not allowed to go short because you're trading the daily time frame, right? Now, if you trade in the lower time frame, like the 1 hour, and you see a downtrend, this downtrend here on the 1 hour, then you can probably take advantage of that, right? Yes, you can use the lower time frame to zoom in to see when the trend is going to, is changing, right? Because okay, for example now, right? When the market make the impulse and market pulling back, you want to enter off the pullback, right? But you don't know when the pullback is going to end because it's just a few candles going down on the higher time. Now, in order for you to take advantage of the reversal when the pullback is about to end, in order for you to want to go long, right? You would want to zoom in on the 1 hour time frame and you wait for the trend to change. We call that a break of structure. Once the market breaks the downtrend structure, once the market start making lows and making and start making higher highs, that's when the structure is broken and we know there's an uptrend now. So we know that okay, this pullback is over because the downtrend on the lower time frame has changed to form an uptrend, right? So that's when you would try to execute and jump in the uptrend. That's when you try to jump in the pullback, right? If you're scalping, then you probably look at the 4 hour. You look at the 1 hour when it pulling back, and then when you're trying to identify the trend change, then you can probably zoom in on the 30 minutes or the 50 minutes. I would say the 5 minute too low. The 10 minute too low. I mean, I would go down in it, but I will advise you to go down in it. Until basically in forex, the higher time frames tends to respect the rules, right? The lower time frames sometimes they can get away with murder. You know, the lower time frames it doesn't look as elegant as the higher time frame. Like on the higher time frame, you can see clear lower lows and lower highs, right? But then when you hop onto the lower time frame, things tend to get mushy. You don't see a nice flow, you don't see a nice wave. So that's why we stick to the bigger time frames, right? So let me just go over the trend change, right? We make a high, we make a low. Make a high, we make a low, we make a high, we make a low, we pull up, right? The structure, when the market reach here, the structure has not been broken yet, right? It's only when it makes the first lower low. In order for the structure to break, let's say the market day here, right? In the middle here. The market could do whatever it wants. Okay, let's say this is a low. This is a low, right? The market could do whatever it wants. When it did in the middle here, it could do whatever it wants, right? It could drag, it could go sideways, whatever, right? The structure is not broken until a lower low is made. So this is considered an uptrend until the market goes beyond this point, right? Once the market goes beyond this point, then we know that it's no longer an uptrend, it's a downtrend because it just made a lower low. So now we're expecting a pullback because the structure has been broken. Once the structure is broken, the market can either go into consolidation or it
You can blend it, man. Blend it.
yeah. So we can either expect it to go into consolidation or we could go into a downtrend, right? Right. So even though it make a lower low, right? If you want, you can assume, okay, here's a downtrend now, and you can probably place a trade off of it, right? But if you're a conservative trader and you want to make sure, you wait for the market. Yeah, you wait for the market to make the lower high, right? If you're a conservative trader and you want to make sure there's a downtrend, right? Because the characteristics of a downtrend is not just a low. It's a lower, a lower high, and a lower low, right? So that's basically a break of structure. That's basically a trend change, right? Sometimes the market could go sideways. If you see that the market not making lower lows and not making higher highs, then we know that it's in consolidation, right? Usually, you don't want to trade consolidation because it's a short-lived trade. You want trades that move far, that you can get 100 pips, 200 pips, 300 pips from, right? Right. So, any questions? No. All right. So, let me just look at some trends, right? You don't really know how long the trend could last because you just had to wait for the structure to break, right? All right. So, let me just hop down to the 4-hour and you just draw out some trends. Now, this is something for you to practice on your own time, right? Yeah, the more you practice this, the better you would become at identifying the trend because it's not as easy as you think it is. I draw it out just now there and it looked nice and pretty. But when you hop on the charts, sometimes the charts could confuse you. So you got to be able to train your eyes to identify the higher highs and the higher lows by simply practicing it, right? So I could just draw out some for y'all, and then we go have a session where y'all draw it out for me, and then I'll tell you if you're correct or whatnot, right? So we go start from this area. We go start from down here actually. So, ooh, you have a low, you have a high, right? You have a low, you have a high. You have a low, you have a high, right? Let's do that, right? You have a low, you have a high, right? Now, the reason why this was a high, right? Now this was a low, right? Now the reason why this was a low is because this was the lowest point before the market pulled back and surpassed the previous high, right? This is the high, right? And this is the low. Now the reason why this is the low is because this is the lowest point before the market pushed up and surpassed the previous high, right? And this is the highest point before the market pulled back. You want to take the highest point and the lowest point, right? Now, this is the high, right? And the reason why this is the high and not this, right? Because this is the highest point before the market pulled back, right? Create a row and then it create a point higher than this high, right? So now if you're not uptrend, you're expecting this to pull back and not pass this low and continue up. But instead, the market went lower than the previous low, right? So now this is a lower low, right? And then the market pulled back, made a lower high, and then it pushed down, made a lower low. And this is basically okay. It didn't pass the side. This was the highest point before it turned around, and now it didn't make a lower, right? Now I know you're seeing all this drama in the middle here, right? And you're seeing all this drama here. Now that's what I mean by it won't be as easy as what I tried out on the chart, right? You had to be able to see through the drama and follow the rules, right? To be able to identify the trend, right? Because you're making higher highs and lower lows, right? It can have whatever drama it wants in the middle here. As long as it make the high, make the low, and make the high, right? That's why you need to practice drawing it out. Connecting the dots. You have to practice drawing it out. I do how to draw it out because I've seen this hundreds of times and I can just look at the chart and tell wait what the lower highs and whatnot is. But not all the time. You won't be able to do this without practice, right? You could ask Justin. Me and Justin used to study during the summer, and it wasn't a piece of cake to find these higher highs and lower lows. You know, it took practice, right? Right, Justin? Wait, Justin inside there? Justin, share some insight on them.
I have real noise in my background.
Oh, okay.
Yo, we spend days, hours of practicing that. Real weeks and I used to stay up all kind of from like 12 to like 5 in the morning just watching them trends. So,
All right.
But once all that practice it over and over, you just start to see the real play. Like when all that first start, like it might be a little confusing, but if all the people always on it, watching the chat, you don't even have to just watch the chat, go back and watch the chat, and you go start seeing it clearly now.
All right. Thank you, Justin.
I have a question.
Mm-hmm.
All right, so you might have, well, from the charts there, you might have a high and then a low. I might start to go a downtrend. How you might know which low is the lowest low? Because you might have a low point, and you might think that's the lowest low.
Okay, well, first of all, right, when you're in a downtrend, you don't really care. Mute your mic. You don't really care what's the lowest low, right? Because you want the lower high to enter, right? So you know that. Thank you, John. You know that once the market passes this low, it could go as low as it wants. You don't care. All you're looking for is the pull back, right? And when it pull back, then that's when you look for the lower high to enter on. If you get what I say, right? Because when the market going down, you already missed the move. You never want to chase a market that's already going down. You want to catch the market as soon as it turns in, right? Because that's like you're increasing. You're basically you want to catch the whole move. Okay. Yeah. So you don't if the market's in a downtrend, you don't worry about how low the lower low is. You just want to get the lower high so you can enter and ride it down, right? Until the trend change. So just draw out some more for you. Go back, the highest point before it turn around, right? Before it make the lower low, right? So you see, make this lower low here. Simple, right? Now even this one could be considered. Go back, low. pull back, right? Pull back, low. Now here is a very important thing to pay attention to, right? Now you can see here that the market started an uptrend without breaking the structure at first, right? So this is a structure here. When I say breakout structure, this is a structure. This is the lower high, right? Now for the structure to break, the market had to go beyond the lower high. And this is only considered a lower high once the market surpasses the lower, right? Now, the market started making the characteristics of an uptrend before breaking the structure, right? So you see the market make this, but you don't know if this is a high yet, right? The market pull back, right? Because sometimes you could think, okay, this is the lower high, but this is not the lower high yet until the market makes a low. Now the market did not make a low, and it pulled up and it surpassed this level. Now, once we see something like this, then we know, okay, look, the market just make a higher high, right? It didn't pass the previous high, but look, we have a high, a low, a high, right? So that now we could now expect the structure to be broken, because now we have a little uptrend in this downtrend, right? And then the structure was broken, make a higher high, make a lower low, a lower high, make a higher high, right? And now for this little trend we have here, the structure was the trend change again when it passed this level, right? So on the higher time frame, this could just look like one move. This could just look like it come down, it pull back, and it come down again, right? But because we're on the lower time frame, we could see the small trend, right? So now you look here, you see, okay, I can make a low, pull back, right? We're just practicing this because you have to practice this on your own, you know? Practice it, take a picture, drop it in the group chat. I'll tell you if you fucked up or if you get through, right? Low, now, this is a higher high, simply because it's the highest level before the market made, this is a lower high because it's the highest level before the market surpass this this low, right? Now, on your own timing, you can go through the charts and do this exact same thing, right? And this is why we use the tools. I was teaching you how to use the tools yesterday. This is why we use the box, the line, so it can help us practice, right? And then you see the market make a low, right? Now, even though you see this, the market come here and then pull back here, this is not the lower low, simply because it didn't pass this low, right? You wait for it to pass. You wait for it to pass this low for it to be considered the lower low, and then, well, this is a lower high, right? But then we had a small uptrend forming down here. Boom, boom. Now, this here, if you look closely, you would see that the market actually made a high, right? Made a low, right? Made a high, right? However, it come all the way down here and it made a lower low, right? Let me just move this so I can see it, right? But this is sometimes, obviously, the market does not follow the rules all the time, and you would get instances with this, right? Now, this is why we give our stop loss room, because sometimes the market would go beyond the level because nothing nothing is perfect, right? If the market respect the rules all the time, then you would make a lot of money. But because the market doesn't respect the rules all the time, you had to be able to keep yourself safe, right? Now, a simple trade, we know the market pullback and the market should not pass this point. It should not make a lower low because it have the characteristics of an uptrend, right? If you want to enter the market at its lowest point, you'd place a trade here. You'd give your stop loss room because you know it's not supposed to go beyond this point. Even if it does go beyond it a little, then you give it room, because some trades we just call it giving a trade space to breathe, because the market needs to breathe, you know. Just because this is a lower low does not mean it'll stop. It doesn't always mean it'll stop there, right? And the target would be the highest point, for example, right? Then we had, I remember this is the 4 hour time frame, right? So we're seeing these moves, these moves right here. These are trends on the lower time frame, right? And you just have to practice how to train your eyes to identify these trends, right? Now, what I just teach you out today is called a confluence. Basically, in trading, we call reasons to enter a trade confluences, right? So this is your first confluence that you learn. Your first knowledge of how and why, where, when the market moves the way it does. Whenever you're about to enter a trade, you never want one reason why you enter the trade, right? You need at least 3, 4, 5. The more reasons why you enter in the trade, the higher the probability of the trade working out, because you're dealing with probabilities, right? Now, this is one reason why you enter this trade. I have about 5 or 6 more to teach you out, right? And sometimes you would find a trade, and at this very point, right, you would see 5 reasons why the market would not go beyond this point and why the market would drop. And when you have all these lined up, then you could be confident to take a trade, right here with your stop loss, boom, and then you catch a big nice move, right? You should be able to come on these charts within a few weeks and follow these rules that I taught you to find trades on your own and enter them and profit off of them, right? Any questions? Because if everybody understand this lesson, then we can move on to the next one, right? But before we move on to the next one, we have to practice this one. I just did it in front of y'all. Y'all have to go on the charts and try to see this, to see the trend, mark out the zones. You could do it on your MetaTrader and you could do it on the computer. As homework, I want everybody to do that. Draw out your highs, draw out your high lows, and then drop it in the chat. If you come on TradingView and do it, just click the little camera, drop the link in the chat, right? If you do it on MetaTrader, pick your time frame, screenshot it, and drop it in the chat, and then I can guarantee you at least 50% of all you will be wrong, and I'll tell all you what you did wrong, and then you can try again. right? So if all you're happy with this session and all you learn something, drop something in the chat so I know, and we can end it here.
Yeah, pretty much understand. It's pretty decent. Pretty decent.
That's it. That's everybody who learned something. About 5 or 6 now. Can I have any amount? You know, it's just that's just I just choose the one that works for me the most. Alright, we go hop off here, alright? Have a good night.